morning and happy Friday. It's the 17th of December today. I'm Sophia Mavridis, a market analyst with Bell Direct. Well, yesterday the market started strong, however closed 0.4% lower by the end of the session. Shares rose higher after the US Fed announced it would wind down its asset purchases, known as tapering, at a faster pace amid a continued rise in inflation and signaled an interest rate rise next year. Yesterday, information technology gained the most while healthcare fell 5%. The local market was dragged into the red by heavy losses from CSL, which lost over 8% yesterday. The biotech company came out of a trading halt yesterday morning. Its share price was in a trading halt whilst it launched an equity raising, and the institutional component raised $4.5 billion at $273 per share. So that's an 8.2% discount from its last close price. Champion Iron, CIA, was another of the worst performers. On Wednesday, Macquarie maintained their Outperform rating on CIA with a $7.40 price target. The broker is generally positive on stocks with iron ore exposure, and Champion Iron is seen as a key mid-cap pick. Meanwhile, Mesoblast MSB jumped 11% off the back of a clinical trial update, where they're working on regenerative medicines for inflammatory conditions. Remember, this comes after its share price crash on Tuesday, after the pharmaceutical company Novartis terminated their agreement with Mesoblast. And WiseTech WTC jumped over 6% to $59.10 a share after hitting a new all-time high at $59.25 in intraday trading. And the most traded stocks by Bell Direct clients yesterday was CSL and Fortescue Metals FMG, which yesterday revealed it's looking to repurpose its New Zealand oil refinery. Morgan Stanley retained their underweight rating on FMG at a $14.05 price target, and Macquarie retained their Outperform rating at a $21 target. FMG is also a Bell Potter buy at a $19.75 target. And Woolworths WOW, which has come under some selling pressure this week after a trading update. Its bottom line took an $150 million hit. Analysts were expecting its pace of growth in grocery sales to ease off once restrictions were lifted, but were caught out by the extent of COVID ramifications. Woolworths staff were required to be tested every 3 days for Delta, then had to wait a few days for results, and this interrupted the efficiency and productivity of the supermarket's labour-intensive operations. The pandemic also caused supply shortages and delays, which led to a sharp increase in wholesale grocery prices. Most brokers have updated their recommendations on Woolworths and lowered their price targets this week. UBS retain their sell rating, while Macquarie and Citi are neutral. Well, European stocks closed higher as investors took in central bank decisions. The Bank of England yesterday hiked interest rates for the first time since the beginning of the pandemic. Meanwhile, the European Central Bank further cut its bond purchases, promising to continue its monetary policy support for the Eurozone into next year. And the US Fed announced several rate hikes. In New York, equities were lower as some of the big tech names struggled, which saw the Nasdaq drop 2.5%. The Dow also down 0.08% and the S&P 500 down 0.9%. Looking to the local session ahead, despite the sell-off in tech in New York, the local market is set to open higher. The SPY futures are suggesting a 0.14% rise at the open, which is supported by a broad rally in commodities. Oil is trading 1.5% higher above $71 a barrel. The gold price rose for a second day, trading at $1,798 an ounce as the dollar weakened and inflation threats are more evident after central bank meetings. And the seaborne iron ore price is higher at $111 a ton. In economic data, yesterday the unemployment rate was released, which fell to 4.6% in November from 5.2% a month earlier. Unemployment fell by 69,000 people. Employment increased by 366,000 people, that's 2.9%. And the large increase in employment saw the participation rate increase to 66.1% in November. That is slightly under the peak in May and higher than the start of the pandemic. And also note that Incitec, IPL, NAB and Nufarm, NUF, are set to hold their AGMs today. As for some trading ideas to consider, Bell Potter have a speculative buy rating on S2 Resources, S2R, and have increased their valuation by 33% to 27 cents to reflect the addition of the Greater Forsterville project in Victoria to the company's portfolio, an exploration project adjacent to one of Australia's most profitable gold mines. This is in addition to the company's ongoing target generation and testing in Finland and Western Australia. SR Resources closed yesterday at 17 cents, implying 37.1% share price growth in a year. Bell Potter have also maintained their buy rating on ANZ Bank with a $30 price target. Macquarie have also maintained their Outperform rating on ANZ at the same $30 target. ANZ closed yesterday at $27.43, implying 9.4% share price growth in a year. And Trading Central have identified a bullish signal in Newfield Resources and WF, indicating that the stock price may rise from the close of 44 cents to the range of 51 to 53 within 24 days. And that is everything for today. I'm Sophia Mavridis with Bell Direct. Have a great Friday and happy trading.